Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleagues Reema and Nigel. Good morning, guys. Things are looking much better, right? I mean, the smile tells it all. Reema. US equities are up, 3 to 4%, and it's looking good overall. You got the dollar index, which is down. Yields are down even more. I mean, the dollar index is at about 106, but US Treasury yields saw massive declines. And I think we are coming off with that late, powerful surge that we saw in the Nifty in the last 30 minutes. So this should only help incrementally at the margin. The fact that what has happened overnight is very, very positive. Although I think it still yields to debate whether the moves in the US will continue. There are lots of disagreements. I mean, actually completely opposite views, which we will talk about with regards to the Powell's speech yesterday and how markets interpreted that. SGX Nifty is indicating, I think, a slightly 77 point higher, started about almost 19,000 this morning. Reema, hi. Nigel, hi.
Hi, and that would make us higher for the 8th consecutive day if we manage to close up in the green. And what a powerful rally that we had in the US markets. Just to take that point forward about the US 10-year bond yields, right now they're at 3.63%. Yesterday was 3.62%. This compares with 3.8% that it was pre-Powell speech. So we saw a decline of nearly 12 basis points in the US 10-year bond yield. And compare that with the peak level. That was nearly 4.32%. Even take a look at the terminal rate, the Fed funds rate, the peak rate that the market is anticipating. Well, now it's come down to 4.95%, hitting a peak in May of 2023. A couple of months back, the peak rate that the street was anticipating was more than 5%, which could peak out somewhere in June. So clearly, there has been that big dovish tilt in the market. And for our own markets yesterday as well, it was a very powerful rally. The Sensex conquered that 63,000 mark. The Nifty closing at yet another record level. And look at the flows that we got. The FIIs net bought 9,000 crore in the cash market. The DII sold 4,000 crore. I know a lot of it is to do with an MSCI rebalance, but still gross volumes massive.
Well, that's right, Reema. Massive volumes is what we saw, and that explains why we saw that big surge in the final hour of trade. But Prashant, how are you reading the entire setup?
I mean, positive, Nigel, right? I mean, there is absolutely no two ways about it. The price action tells you that, things are set up very nicely. So let me just quickly start from the basics with regards to what Jerome Powell said and what markets kind of interpreted or took off from that. So the first thing was he's kind of cemented expectations that the pace of hikes are going to be slower. It's not going to be 75, it's going to be 50. Now, you might ask, well, what is new? Actually, there is not very much new. But the fact is that throughout the statement, and I'm not going to go into every detail of what he said, he did not push back against what is very clearly easing of financial conditions, right? Which is asset classes are rallying once again. The US equity market, for example, has been in an you could call it a bear market rally, but a rally nevertheless. And markets rallying, any market rallying is financial conditions easing. So the Fed chair did not push back against that. He did kind of vow to, and I quote, stay the course until the job is done. In a way, he repeated a lot what he'd said post the last Fed meeting. He reiterated what others from the Fed have recently said as well. But the fact is, the speech yesterday did not raise any fresh alarm about inflation. I mean, it's not as if he said that, well, inflation is, too high and we need to do more. I mean, there was no incremental kind of pressure or alarm coming in from the Fed chair. And I think that is what the market took away. What next? You got the US jobs data, which is, on Friday. Between now and, the next 2 weeks when the next Fed meeting is, the FOMC meeting is, we will hear from many more Fed members. But I think, what he said yesterday, the Fed coming in from the Fed chair, this will stand. The fact that it's going to be 50, pace of hikes perhaps are going to be slower from here on. What do the US markets do? They rallied. I mean, the S&P 500, the NASDAQ even more. But just three things. These are technical indicators, and the reason I'm putting them out because they're coming together in a pretty constructive way. The S&P 500 has seen a monthly close above its 200-day moving average, one. You got the dollar index, which is closed just under the 106 level, 105.7 this morning. And WTI crude oil is seen what is known as a bearish outside month. We had two previous instances, one in 2020, the other in 2018, before this bearish outside month. And once we saw this, oil prices fell another 15%. That's why I'm saying, but of course, in 2020, when oil fell, everything else fell because it fell because, economies were shutting down, etc. In 2008, there was a recession risk. And so, what follows from lower oil prices in terms of implications for other asset classes we need to watch? Will it be the same kind of regime or will it be different? For India, because we are such a big importer, I think this is very good news because it helps macros, it reduces our import bill. What's the trade setup? Yesterday on the Nifty, we saw a huge surge, last 30 minutes basically. FIIs bought 9,000 crores. That's over $1 billion. But you've got to put this in context because there was a MSCI rebalance, which we've been highlighting. I went back and looked at what JP Morgan's estimates were. They said the MSCI rebalance was expected to have an impact of about $961 million. So, you know, if this is anywhere close to even 900, what came in was about $1.1 billion. A lot of it, I mean, bulk of it was because of the MSCI rejig. The surprising thing to me was the price impact that we saw. Usually what happens is, you know, from the time that the changes in MSCI are announced to the time that effective changes take place, people, I mean, you know, funds warehouse these stocks and kind of, you know, the ownership changes hands in the last 30 minutes on the day when the effective change is to be made. So there is little price impact. There is volume impact, but not price impact. But yesterday we saw massive sort of price impacts as well. Nifty is broken out as a result of yesterday's powerful move above the upper end of the channel. What needs to be seen is if this is just a throwover, which is, I mean, you know, a false start in that sense, a false breakout or a genuine breakout. We'll find that out today and over the next couple of sessions. FII net long position in index futures is over 1 lakh contracts now. I mean, that is we've been saying this is a bit of an extreme, but does that mean that prices start to reverse? No, I mean, you got to wait for price signals to give you that reversal sign, and that has still not happened. Keep a trailing stop loss at about 18,539, 18,540 roughly in that zone. And of course, I mean, with yesterday's rally, the market has put a fair bit of distance between where we are now, where we're expected to start, which is about 18,900, and where that trailing support level really is at. I mean, looking good this morning, especially given the fact that US markets have seen this big break higher. Nigel, what are you watching?
Well, you know, Powell's speech is likely to power the Nifty closer to around the 19,000 odd mark. The question is, will portfolios start feeling it? Because the mid-cap index is still around 2% away from its 52-week high.
Yeah.
The small cap index is close to around 17% away from the small cap from its 52-week high. So portfolios are not really feeling it. You'll get a sense of that once both these two indices start moving up. Mid cap is within kissing distance, but the small cap index, you like that to get closer. Now we're entering into today's December, start of December, and December has been the best month for the Nifty. You know, if you compare it with any other month, I did a quick study, I removed the returns for the last 20 years, and on an average, it's up close to around 3.2%, which is the best month. The other two are July as well as September. Now, the FIs in the F&O market, well, they added some longs, close to 7,000 long contracts, and they covered some shorts. On the short side, it appears there was some short covering on the Nifty bank, while on the Nifty, there were long positioning that was added. And on index options, well, they wrote puts aggressively. You like to see them adding long positions and as well as writing some puts, and that's precisely what happened. In case things go wrong, they bought some puts as well. That's a crucial data point now. The clients, they continue to add short positions. Even yesterday, they added 15,000 short contracts in the ratio of 3 shorts for 1 long position. So currently, clients which have been getting it right for the last many months, they net short on the index. But the FIs are net long and aggressively net long. Close to around 75% of their positions are on the long side. On the options side, well, they're writing puts at will. And that's why the PCR has moved to the higher end of the range, 1.55 odd. In the past, we've seen it go to 1.65, 1.7 as well. But now put writing is becoming very, very easy. However, yesterday, the call writers, well, they were taken to the cleaners. 18,600 call, 18,700 call. Between them, you had open interest shedding of close to 41 lakh shares. They got stuck on the wrong side. There was MSCI flows came in, and there was big unwinding out there. On the put side, though, that 18,700 put, well, that was very active. The premium out there is around 30 rupees or so, added more than 70 lakh shares. And given that's today's expiry, the 18,700 put is the most important strike that you should be tracking, given the kind of open interest that we saw. Now, backed by the MSCI flows, part of this good news that we have got overnight, that could be, in the price, because we surged up close to around 80-90 points just in the last hour. Buy and dip strategy has worked, so why do you change that? You need to stick to that. If you get a bit of a dip, which I think we'll get at the opening tick itself, I like to see a gap up. We could see a bit of a dip, get into it. And the support zone, since we saw writing at around 18,700 put, well, the support zone is at around that 18,650 to around 18,670. SGX Nifty is indicating a flying start. But yet again, the portfolios have to feel good. So I'll be tracking the small cap and the mid cap indices. We need to see greater participation out there. Then you'll be feeling like Santa's coming to town and it's, we are at around 19,000 odd.
Let's give our viewers some hope, right? As you said, December has actually been a very good month.
Absolutely.
Last December, the Nifty gained about 2.2%. In December of 2020, the Nifty was up nearly 8%. And in the December of the prior month, which is just before COVID, the Nifty was up close to about 1%. So December historically has been an important month and a big month in terms of positive gains for our markets. And it's also going to be a very busy day. We've got auto sales to react to. It's the weekly options expiry. So today could be an interesting day, particularly in the last 1 hour of trade. And Asia this morning is off to a flying start. Hang Seng is up 2%. The Chinese markets, the Nikkei, that's the Japanese markets, are up close to about 1%. Strength seen in the Taiwanese and the Korean markets. So across the board, there is some amount of euphoria and strength that we can see in the Asian market. But let's get our viewers some equity calls.
Absolutely. This is Surendra Goyal of Citi, who says that domestic public capex spend is set to be at its highest since FY09 this fiscal year, and private capex outlook is improving at the margin given improving capacity utilization, further evidenced by the rise in loan growth trends to large industries. He says decline in crude oil prices should aid too. Citi adds L&T to their preferred list as they believe it remains well positioned to benefit from the improving capex outlook. Surendra says valuations for L&T also seem reasonable in the current market context.
Money market views now. Parul Mittal Sinha of Standard Chartered Bank says the rupee has been range-bound last week despite dollar weakness on the back of strong importer demand. She says given sustained dollar weakness post Powell's comments, she expects the USD INR to trade in a range of 80.8 to 81.8 against the dollar this week. Apart from the dollar moves, she says the trends in oil prices will be key given OPEC meeting is due this weekend.
Well, on bonds, we've got Parul Mittal Sinha, who says domestic yields traded in a tight range last week. She says the credit deposit growth wedge is expected to continue to put pressure on the short end of the rates curve, and the downward pressure on global rates post Powell's comment is likely to have a salutary effect. She expects the 10-year benchmark bond yield to trade in a range of between 7.2 to 7.35% this week. She says global rates and oil prices will provide cues to markets.
Well, we have a lot of stocks that will be reacting to news today, and we'll get to that in just a bit. But just to highlight what the stocks we're looking at IndiGlobe Aviation, Zomato, Dynamic Tech, Sangi Industries, Shilpa Medicare, Tamil Nadu Mercantile Bank, KPI Green, Oberoi Realty, Suntech Realty, as well as ONGC. They are all the stocks that we're tracking on the back of positive news flow. And on a day like today, we expect we have not got any negative news flow, so we'll try